What if you could support the same charities, give the same amount every year, and potentially save an additional $12,500 in federal taxes than you're currently getting? That difference may simply be just how you organize your giving. If you give to charities every year on a regular basis, stay tuned. You're not going to want to miss this episode.
Welcome into another episode of Legacy Beyond Wealth. Ben George with Rob Shelton of Axio Wealth Management. Find them online, axiowm.com. Talking about giving today, and I know we're talking mainly families that they give generously every year, and that's a lot of the clients and people that Rob works with at Axio. But what if you're one of those families but not receiving the full tax benefit of that generosity? It's not right. It's not the goal. It's not the priority, but it is a big part of giving to make sure that it works within your overall plan. So today we're going to talk about that a little bit with Rob. So I want to kind of start with the timing of a charitable gift. Rob, why does that actually maybe make such a significant difference when you're talking about these tax advantages?
Yeah, and I think, like you mentioned before, people don't just give to charities because of the tax benefits, but I've never met someone that says, hey, I give to a charity and I don't want the tax benefit if there's one associated with it, or maybe a strategy that could give you a little bit more efficiency that's out there. And so, when you choose to give to a charity, there's something on your tax return called a standard deduction. And a lot of times people don't look at how to use that standard deduction to be to their benefit in different years. And that standard deduction is used, or you get to itemize on your tax return. So those itemized items might be things like charitable gifts, mortgage interest, and local taxes that might add up. And so what you have is either one side is your standard deduction and the other side is your itemized items. What I find is people try to itemize all the time thinking that they could write off more, but if we could maximize that impact by alternating different years between how we look at using a standard deduction versus itemizing, it could make a big difference in some of the tax savings that is potentially out there.
Yeah, I know everybody's heard of the deductions, the standard deduction, and not everybody's that tax savvy, Rob, that maybe doesn't get into this a whole lot. But can you kind of strip down that, like take out the tax language and just kind of make that kind of simple to understand in terms of why this deduction and why this plays a big part in getting in really maximizing the efficiency?
Yeah, thinking about it, going back to the track days, there's something called a hurdle. And as a track runner, you got to be able to clear that hurdle. And you receive a tax benefit every year of a hurdle amount. And let's just say, for argument's sake, that might be $31,000 a year for a married couple. Well, if you're just barely clearing that hurdle when you add up all of your other deductions that you have, so maybe you're doing $40,000 in itemized deductions, you're only clearing that hurdle by about $9,000. But if there's a way that we could clear that hurdle by more than $9,000 in certain years, and then just use the standard deduction in other years, that's really where some tax benefit can come into play. And we call that bunching strategy. When you'll take several years of charitable giving into a single year, that will give you a much bigger deduction in that single year than if you just continue to itemize every year.
Yeah, Rob, I like that bunching strategy. I know that's one that a lot of people are kind of familiar with, but let's kind of dig into it a little bit more and talk about this family in this example. Can you kind of walk us through how this process works?
Yeah, so we had a couple that came in to meet us. They came in for that discovery meeting. Very successful family, made quite a bit of income in a year. And, this couple was willing to give back. They gave back just over $48,000 every year to a charity. And they also had about $14,000 in other deductions that are out there. So for this example, we'll call that standard deduction, that $31,500, kind of that hurdle we talked about beforehand. And if they continue to give $48,000 each year, their total deductions over each year would be about $62,000 annually, taking that $14,000 and that $48,000 combined there. And if we looked at combining those charitable contributions over a 3-year period of time, that really adds up to about $188,000 that they could get in a deduction in a single year. So when you shake this all out and you use this over time, basically what it comes in is that they have the potential that they could be able to save $12,000 over that 3-year period, or about $4,000 a year. Now, a lot of people say, well, when I want to donate to a charity, I don't want to just give, 188,000 in a single year. And that's where the tool of a donor advised fund really comes in, or it's also called by acronym a DAF. And you'll hear that in the industry quite a bit. What that allows you to do is to take that larger, in this example, 188,000, and put it in a single year, get that deduction, and then each year you can slowly take out and put money towards that charity. I kind of joke it's like a health savings account, but for charitable giving that's out there. And people tend to understand really well how those health savings accounts work. So this really had a big impact for this family.
How do the numbers change? How significant actually is it when you take this approach?
Yeah, I think when you take a look at it, just to simplify things, the family gave the same total amount over that period of time. But the bunching strategies and the tax strategies basically gave them an additional 33,000 of deductions in this illustration.
And that's pretty significant too, right? I mean, you're talking about that could be money that you use really to give back to more charities or continue giving or use for your family. There's a lot of different ways you can repurpose that money. How does that become approximately this 12,500 in tax savings? How does it actually break down?
Yeah, so if we looked at it, this couple, because they were in a high income, they were in the 37% federal tax bracket. And so for every additional dollar that they put in to a donor advised fund, it had about 37 cents on the dollar of tax savings. So by bunching that up and using that each year and leveraging the standard deduction in the off years, that's where it came out to be roughly about 4,000 a year on average of tax savings that they weren't getting beforehand. And again, all we changed was doing a little bit bigger contribution into this donor advised fund in the first year, but all the charities still got the same monetary impact. It's just slightly changing how they went about it that was able to save them. And Ben, some people may look at that and say, well, 4,000 a year isn't tens of $1,000s of tax savings, but I'm still a cheap enough guy. When I see a penny in the gutter, I'm still going to pick that up if it's a benefit to me, right?
Yeah, absolutely. And there's a lot you can do with that money too. Again, it can just be further helping out these passions and these purposes that mean a lot to you. So every little bit matters. Even if you look at that smaller number in the big picture, it might not seem like a lot, but like to your point, every little bit matters. When you talk about the strategy too, Rob, I think I've heard the option of donating investments instead of cash. Does that matter here? Could that improve potentially the results?
Absolutely. If you have a highly appreciated asset, maybe it's closely held business stock or in real estate and you're looking to sell that, or you've got, I had one client that bought into NVIDIA years ago and had some really highly appreciated stock that was there. Donating that stock in kind can actually have what I would call a double tax benefit because you don't have to realize the capital gains tax and you get the donation when you put it in. So this can really be very impactful for those that do have highly appreciated assets and something that really ought to be looked at.
Are you ready to unlock the freedom to live your best life? Schedule your no-cost 60-minute discovery meeting with our team today. During this session, we'll take the time to understand your family story and financial dreams. Together, we'll craft a personalized roadmap designed to help you achieve your goals. Let's explore how we can unlock the freedom for you and your family to thrive. Just click the link in the description of today's show to get started.
Well, before anybody goes and just puts all this money, 3 years of donation to this donor advised fund, again, we always encourage you to sit down and talk specifically about your goals and your situation with a professional team like Axio Wealth Management. But what do you need to understand, Rob, before you start making that decision to go forward with that?
Yeah, first and foremost, this contribution's irrevocable, meaning once the money goes in, the only way it can come out really is for a charity to benefit from it or be donated to a charity. So the most important thing is that you have a commitment ongoing with a charity that's out there. Second, there needs to be enough financial stability for the family. I mean, you don't want to take all of their savings and everything like that and put it into a donor advised fund. That would not be prudent to be able to do. So we want to make sure that when we're talking larger contributions in these bunching strategies, we got to make sure that the family's still going to be okay and they've got an emergency account reserve set away for other potential issues that might arise in the future. And then, the third is to make sure that the deduction is usable. There's certain limitations on how much you can be able to donate and things of that nature. And that's where we'd want to work in concert with their tax professional to make sure that we're taking a look at that. And finally, you want to make sure you're always taking a look at fees and usability and things of that nature. Not all donor advised funds are set up the same. We have those that we've done due diligence on. I've seen some clients come over where they haven't been nearly as friendly with other donor advised fund sponsors that are out there. So all of those are really important things to consider. And quite honestly, we would go through that discovery process to see if that would be the right fit.
Yeah, you can always schedule that discovery call with Rob at AxioWM.com. And I'll always like kind of look at the broader view a little bit here. How does this fit into your broader planning approach that you use at Axio?
Yeah, I think that what was Benjamin Franklin's favorite quote, a penny saved is a penny earned, or something of that nature, right? That we hear all the time out there. And as we're able to save in different tax strategies and situations, and you've alluded to this during this conversation here, Ben, you can then put that money towards other things that are important to your family that can be able to grow and have a compounding effect that's going to be out there. The other thing I love about this is involving children and grandchildren. And honestly, we just met with a business owner that came in for that discovery meeting, never heard of donor advised funds before, had a young child that had a disability and passed away at 11 months old. And that was very impactful to this family. And they wanted to give back generously to this community and honoring this child that did make a big difference in their lives, even if it was only for 11 months. And showing them the power of a donor advised fund completely changed their mindset, that they didn't want to give back because of the tax benefit, but they looked at what they could do with the big contributions they were looking to be able to give and that impact it could have. And man, it was really marrying a strategy to a goal with a client. And that's what we love looking at, right? Getting a tax benefit by fulfilling the values of the family. That was big.
Yeah, that's powerful. And that's, again, why we want to dive into this a little bit. We've talked about a lot of stuff here today. And again, encourage you to follow up if you have any specific questions or want to look to see how this might look for you and your family. But as we kind of finish it up here, Rob, what's the main lesson you want people to take away from this video?
I think the biggest thing is a lot of people think about just giving to a charity, and they think about giving it just straight to a charity without looking at other tax strategies that are out there. And if you find yourself giving to a charity on a regular basis, and charitable giving is a big part of your financial picture, donor advised funds is only one opportunity of several tools that could be used out there. And that's where sitting down with a professional and discovery meeting could really show you the impact, not just that you make for the charity, but also for your own financial picture that's out there.
Yeah, and before you go ahead and make that next major financial, go sit down with your financial advisor and your tax professional together. I know that's what Axio Wealth does. They had bring their dream team together to work on all this stuff, and see if this small change in timing could really make a meaningful difference for your family and those causes that you care about a lot. Because again, this is not just about receiving a deduction; it's about making the giving that you're already planning to do much more effective. And hopefully this video kind of helps you understand that a little bit better. But we'd love to hear from you if you have questions. And again, please subscribe to the show. We have another one coming pretty soon. We'll talk more about financial planning, retirement planning, and the overall strategies that Axio Wealth uses with their clients every single day. But Rob, as always, thanks for your insight today.
Thanks, Ben.